Here's a quick video to explain how to solve number 16 to 20 way. So number 16 and all the other ones related to the quota. How does it work? Well, the initial supply, the national supply is this one, right? Now we will get a shifted supply line to the right. Why? I'm gonna try to explain why. Well, first of all, when we compute the consumer and the producer surplus, we will only bother about the Canadian one. We don't pay attention to the Chinese one. We only pay attention to the Canadian one. But still, how do we compute all this? Well, the new supply line, remember, now whatever the Canadian producer can offer, whatever they can supply in the market, the Chinese are allowed to supply 100 bikes in extra, but not more than 100 bikes. So this means that for whatever the Canadian is producing, the Chinese are allowed to add 100 bytes to that, meaning that for any price, this price here, the Chinese are allowed to offer 100 bytes. Okay, for this price here, the Chinese are allowed to offer 100 bytes, but not more than 100 bytes. What happens right here? Well, it's a bit tricky what happens here because when the Canadians are not producing anything, then what happens to the Chinese supply? Well, it's not really important, but let's say they would not be able to supply more than 100, but then they would have their normal curve right here. So, but forget about this part, right? The interesting part is this one, because we know the equilibrium is much higher than 100 bucks. So whatever the Canadians are producing, the Chinese are producing 100 bikes that they are allowed to import, not more than 100. So the initial formula was this one. Now we need to shift the curve rightward to the right, and we will do this by doing Q minus 100. Why? Well, before for any price, we would have this formula that would express the price, and now we want the same price with a quantity that is 100 higher for the total supply, right? So we wanted the same price, but with a quantity that is 100 higher. So if we want the same price to occur, we need to subtract 100 to the total quantity. Okay, so what is the surplus for the consumer? Well, before it was only this part, now it's this part, okay? And what is the surplus for the producers? Well, before the producers were, let me put that in the back. So before the producers were getting, sorry, before the producers were getting all this, but now they cannot sell a large quantity because some are imported. So now they're getting this part right here. Okay, so this is kind of the new supply. Let me put that. Good. So new. Go with the white. No. Okay, so new surplus for consumers, new surplus for producer. Okay, and you can find the distance between these two very easily. You'll find the equilibrium quantity, but you'll find that this one is just 100 lower. Why? Because there is a 100 imported bikes, so this quantity here is 100 lower. Good. Okay, so this is the one with the quotas. Now, the last three questions are a bit different. I don't ask you to compute anything, but I'm asking you to draw. So first thing I'm asking you to draw is the impact of a price floor. So what does it mean, a price floor? It means a price below which you're not allowed to sell. You're not allowed. You don't have the right to sell below that price. So all this here is allowed. So all this here is allowed, but all this here is forbidden. Now you are not allowed to sell at the lower price than the price floor, right? It's a floor, you can go above it, but you cannot go below it. Good. So this is kind of the price floor. What happens now at the price floor? Well, you have a certain quantity that is demanded, and a certain quantity that is supplied. Of course, people would like to supply a lot because the price is higher than the equilibrium, but demand will be in quantity smaller. So there is less demand than supply, and we say there is excess supply. Excess supply means that there is less demand than supply. There's a lot of people wanting to supply something, but not a lot of people wanting to buy it. So this is the new consumer surplus. Okay, let me change the color to gray like this. And what is the new producer surplus? Well, before the producers were getting, oh, sorry, before the producers were getting all this here, but now they cannot sell as much because there is a price ceiling and you cannot force people to sell. So they will get this here plus this here. Okay. So this is kind of the new producer surplus. And let me change the color to pink. Okay, so this is the new consumer producer surplus. So this part here, let me show you. This part here, this was before belonging to consumers, but now it's transferred to producer. And this small triangle is a loss to society, so is this small triangle here. Usually, this here is bigger than this, so producer gain from a price floor, but not always, but usually producer gain. But in total, for society, there is a loss. This is a loss for society. Okay, there's a quite simple problem here. What happens with a price floor? Well, a price floor is the following. You're not, let me put that in front. All right. So you're not allowed, not price floor, price ceiling this time. Did I say price ceiling previously? Anyway, sorry. So now it's a price ceiling. So you can be below the ceiling, but you cannot go above the ceiling. I think I mixed up both ceiling and floor previously, so I apologize for that. So now you can go below the ceiling, but you're not allowed to go above the ceiling. All right. So what happens? Well, there will be less supply, or quantity supplied will be smaller than quantity demanded. You know, a classic for that is the kindergarten at $7 a day. The garderie à 7 dollars. Okay. So there is less supply, there is less quantity supplied than quantity demanded, and we call this a shortage. So this is kind of the price ceiling here. This is not anymore gained by the producers. In fact, it's quite the opposite. Now it's now it's the consumers that are getting a bigger share of the deal. Okay, so before consumers were getting all this, now they're getting all this plus this part here that was no. Now they're getting only this part because they cannot get a higher quantity than what is supplied, but they still get a transfer from producer to supplier. So usually this part is slightly bigger than this part, so consumers will gain, but not always. And of course, producers, they will lose because before they were able to sell for more, okay, for a higher price and a higher quantity. Now they're selling at a smaller price and a smaller quantity. So suppliers are losing. And the final question, number 21, is what is the impact of foreign demand? So all the exercise we've done previously, we had kind of a new foreign supply like this, and then national suppliers would lose, but but national consumers would gain. Now suppose the opposite. Suppose there is lots of exports and there is foreign demand. Like foreign demand, I don't know, Japanese wants to buy our fish. So what happens to the local consumer? Does he gain or loses? Well, you can guess, right? Probably the price is going to settle at a higher level. It's going to settle here. So the home consumers will lose. Before they were getting this, now they're getting only this. So home consumers lose, but home producer gain. And in total, this is a gain This here is a gain for producer that is a net gain to society. Okay, and this is just a transfer, but this still is a net gain to society. Okay, I hope it clarifies things for you guys. Good luck. Remember, 19 to 21, you only need to draw and maybe put arrows to identify different sections. Uh, Good luck. See you when